Here's a company worth nearly $1.8 billion. Last year, it sold just $682,000 worth of product. That is not a typo. This is Quantum Computing Incorporated, trading under the ticker QUBT, and it might be one of the most fascinating bets on the entire stock market. So is this the future of computing or the most expensive lottery ticket you can buy? Let's look at the numbers. A year ago, this stock was on fire. It rocketed to almost $25 a share, riding a wave of quantum computing hype. Then reality set in. Today it trades around $8, a fall of nearly 70% from the top. And on the volume chart, you can see those violent spikes, where tens of millions of shares changed hands in a frenzy of buying and panic selling. Now the business itself is actually growing. Revenue has climbed from $136,000 a few years ago to $682,000 last year. That's strong growth on paper, but let's be honest, these are tiny numbers for a company valued in the billions. And here's the catch: quantum computing doesn't just lose money, it loses money on every single sale. Its gross margin is negative. Its operating margin sits near minus 550%. And its cash burn is getting worse, with the company bleeding nearly $37 million in a single year. So why isn't it in trouble? Because of the balance sheet. The company holds over $730 million in cash with almost no debt. That war chest buys years of survival, years to turn the quantum dream into real revenue. But that dream comes at a staggering price. The stock trades at more than 400 times its sales. Next to its closest rivals, IonQ, Rightly, and D-Wave, QUBT is priced for perfection in an industry that has not proven itself yet. And make no mistake, this is a wild ride. The stock is more than 3 times as volatile as the broader market, and it has already crashed 74% in a single year. This is not a sleep well at night investment. So breakthrough or bubble, the bulls see a cash-rich pioneer with the runway to win the quantum race. The bears see a billion-dollar valuation built on almost no revenue and endless losses. And the truth is, both can be right until the market finally decides which story it believes. That's the story of QUBT. Remember, this is data and analysis, not investment advice. Always do your own research. If this was useful, subscribe for a new company breakdown every week. And tell me in the comments which stock should we break down next.